Whenever we close a financial period, it has a background effect. All profit and loss accounts, which means revenue and expenses accounts, become zero. And its net effect, which is profit or loss, goes to retained earning ledger. And then it's reflected in the balance sheet. Let's see it in detail. The first financial period is closed on 15th January when we changed its status. In the background, a JV is created for which the date is 15 January. In this JV, the net profit and loss goes to retained earning ledger as credit or debit. So against 15 Jan period, we have 341 as our profit, and this is credit. And same effect can be seen in the balance sheet. And now we can see the same figure in our balance sheet. Let's go back to financial period and see the details when we closed that. When I look at the retained earning ledger, then I find that this figure is through a JV. Let's open this JV. This JV has all expenses and all revenue accounts. And there is one extra account which is retained earning. For all expenses on 15th January, whatever the closing debit balance was, system has entered a corresponding credit balance. For store expenses, 5,500 was accumulated expense. In 15th January JV, the 5,500 is credited. So the expense becomes zero. Similarly, 348 was total sale in this period and system has made a debit entry. And now the difference of debit side and credit side will go to the retained earning. If I am in profit, my retained earning will be on credit side. So we have observed the same for all the periods which I close. The retained earning will have corresponding entries. If I have a look at the balance sheet, there is another effect, which is P&L for current period. For those periods which are not yet closed, like this is my financial period which is not yet closed, which is from 16 Jan to 30th June. For this period, the difference between the revenue and expenses, because this is not closed and no JV yet, but the reflection is in my balance sheet. So whenever we close a financial period, there will be a corresponding JV. Let's close this open financial period. Now this is closed and I regenerate the retained earning ledger and the date is greater than the closing date. Closing was on 30th, so you see there is a voucher on 30th and in this voucher there is a value of the retained earning. I will generate the balance sheet report again. I have closed on 30th June, so I will select any date which is greater than 30th June so that the closing effect is reflected in my voucher. Now as I see, everything has gone to my retained earning ledger and out of the current. Next, whenever I will open up a closed financial period, the previously made voucher will be deleted automatically, its effects will be deleted and new voucher will be generated.